Hey guys, welcome back to another episode of our Forex Weekend Market Review. I am a currency coach of Neil Dube, currency trader and currency coach at FX Link. So today we'll be taking a look at a possible long-in opportunity on the pound CAD. And so, without wasting any much more of your time, I'll see you back in a minute. So the first thing we also want to do as soon as we get to our daily chart is to identify the overall direction of the market. Now to do that, so at this level we can see the price action really down, and at this point we gotta pull back, and then finally this is where we break this significant resistance level, and this is where we come back to get a deep retracement. Now, how do we trade in an uptrend? Past resistance, past resistance has to become a future support, and this is where we take the trade. Now this is simple basics that I want everyone to keep going through, because people tend to neglect the basics of the basics and want the more advanced stuff. So now we've identified the price action is going up, where past resistance has to become a future support. Now what else can we do? Now for more advanced traders, you can use our retracement tool just to strengthen our case. So from this swing low back up to where price action is currently at, you can see that right in our zone, right where we had demand area, this way we get at 82. But now let's try to remove this. You can see the price action didn't quite touch our 82, but around our zone, this way we get at 82. So let's try to zoom in as I decided to take a closer look. There's something else I see. From this A to B, we get what we call an equal measure move. We could take this thing, clone it, and put it at this level. This is a harmonic move. This is at this area, this is where price action was supposed to terminate, and inevitably this is where we got a bit of a bullish move to the upside. So slowly but surely building a case for entry, we identify that we're in an overall direction. See that we're close to a 82, got an ABCD pattern for termination purposes. And the last thing I see is at this area. Look at how our RSI is sloping up. And again, looking at price action, we're doing the exact opposite. So our job is done on a daily chart. We've identified the overall direction of the market, which is the first step. If you remember our trading philosophy on our last week's video. First step, identify the overall direction of the market. Check. Second step is to form a bias. In this case we mentioned that in overall direction, past resistance has to become future support, and we're looking for a long-in opportunity. So we formed a bias or a decision that we'll be buying. Check. Now those two steps are the most critical steps that we should undertake at this pace. So after those two, all the rest are just to strengthen your case for entry, but are not necessary for everyone. It all depends on your style of trading, but those two steps are the most critical steps in trading. So after that, we identify an ABCD pattern. We give it another point. We added our Fibonacci retracement tool, and this gives us another point. So our job is basically done on a higher time frame. Identify what we're looking for buying opportunities. So let's head down to the lower time frame to see exactly how do we plan to hop on this trade. So the first thing I want to add is my extension tool. Right here, where we had the first leg of our ABCD pattern, right where it completes back up to our A leg. And you can see if we try to add this right at this area, this way we had a 618. Now taking a more closer look, this is another level where we could add an extension tool, because we managed to break this level. So we could take from this X to A back to our X leg. Bam, we get in a 618 cluster. Yes, we get a first 626. So we have a bit of a cluster. If you could try to add this thing just to draw a zone that we will specifically looking at. Let me try to zoom in. You can see the price section came in, didn't even hesitate, hit our zone and rolled it back up. Gave us a second retracement, touched it. Buyers came in aggressively, managed to push the price up, and this is where price section is currently at. So now how do we plan to take advantage of this pain? Price is too expensive at this point. We would expect to get at least some sort of a retracement back to our major kill zone, and this is where we might consider taking the trade. Now, another thing I see, if I could try to take this, pay attention to what is happening. We have a really up, and we had this. Price section gave us a major breakout. Look at how aggressive buyers were. Instead of continuing with the same strength, this is where it started channeling. Now, channel is the first sign of a market slowdown. So this is the exact slowdown we might need in order for us to get the retracement. And on top of that, the last thing I'd add is you can see we're sloping to the upside. Looking at an hourly, we get another bearish divergence. So this might be exactly what we need to get our initial retracement that we're longing for. So this is how I might expect price action to play out as soon as the market's open. I might expect a break below, a break out of a lower channel line. Okay, from there we might get a retracement back to this area, and finally we might expect a push at this point, and we might wait for one of our filters, which is a double bottom. After completion, we might wait for higher close bullish candle, and from there, if we do get a bullish divergence, this is where we might be looking to take the trade, and our entry point would be at the close of that candle. For take profit purposes, let's draw out our retracement tool back at this initial leg. This is where price action is currently at. So our first take profit would have to be at a 382 level, and you can see we're back at the retest of this structure. Stop loss would have to be below this lowest low, so at this area we might be looking to push down lower to approximately a 30 pip stop loss, and already you're looking at a risk of 30 pips for a total take profit of 117 pips. Already this is a 3:9 risk to reward ratio, and if you're looking to be more conservative, you might looking to take your first take profit back at this area at a risk of 30 pips for a take profit of 49, but our initial first take profit is at 82. And finally, for our second extended target, we were looking at a 1618 retracement and a total move of 200 pips. And as you can see, this is a wide trade to take 200 pips. Probably might possibly hit take profit after 1 to 2 days after entry, and yeah. So I hope you enjoyed. I tried to keep this video simple but sweet. So hope you enjoyed this video. See you next week. Peace.